The first flow red showed absorption defending a floor. This chart shows the outcome that lesson warned about. Absorption that fails. A bearish order block absorbs its first test perfectly, longs liquidating away from the zone. Then, on the second approach, no absorption registers at all, and a short covering squeeze runs straight through the supply. The difference is written in the open interest. The chart opens with a change of character, marked early on the left, shifting the structure upward out of the prior decline. From there, a broad range develops on the ZEC-perpetual, a bearish order block overhead around 330 to 333, and a demand band at the lows anchoring the floor. The supply overhead is the zone this whole read revolves around. The supply band is marked by the two levels overhead, the zone left by the origin of an earlier decline. Through the body of the range, it does its job passively. Rallies stall beneath it, lower, highs form under it, and the structure oscillates back toward the floor. Its history says where to watch, not what will happen. This chart delivers two tests of it, with opposite resolutions. At the lows, the demand band anchors the range, tested and holding through the chart's middle, the platform each recovery launches from. Higher lows step off it as the structure matures. The floor matters to the supply story for one reason. Each successful defense of the lows reloads the pressure on the ceiling above, a floor that keeps holding beneath a ceiling not yet seriously tested. From the demand band, price mounts its first genuine assault on the overhead zone, a sustained rally that carries the full height of the range and tags the supply at 333.65. The advance is impulsive and the participation is visible. The question, exactly as in the first flow red, is what happens to that aggression at the level. The panel answers on the tag bar. At the tag, the absorption event prints, the diamond at the zone, and the panel describes a defense. Bar delta minus 28,000, regime reading long liquidation. The aggressive buying that carried the rally was met and consumed by resting passive supply. The failed thrust stranded late longs, and their forced exits accelerated the rejection. One test, one absorption, one rejection. The textbook outcome. And the second half is why the textbook is not the whole story. The rejection does not travel far. Price bases in the upper half of the range, holds a higher low, and turns back up. The structure beneath the supply rebuilds rather than unwinds. Within a stretch of bars, the zone that just turned the market away is being approached again. A quick return changes the context. The first assault already consumed part of the resting supply. The diamond visible mid-chart is the first test detection. The same candle carried forward as the chart advanced. As price returns for its second approach, note what does not happen. No new absorption event fires. The second assault arrives with no detected passive defense meeting it. The absence is itself information. Whatever supply survived the first battle, no defense on that scale is registering now. The panel on the second approach reads plus 49,000 of delta, the heaviest buying pressure on the chart, with open interest falling and the regime reading short covering. That combination is the key to the entire read. This is not new longs opening positions. It is trapped shorts being forced to cover. Covering flow cannot wait and cannot negotiate. Against it, passive supply is not a wall, but an inventory consumed at the pace the squeeze demands. The zone gives way. Price drives up through both supply levels in a sustained thrust, the resting supply consumed, the squeeze extending to new highs above the band. The zone that turned away the first assault does not survive the second. What changed was everything that matters. Initiative buying met a detected defense and exhausted. Force covering met a thinner wall and went through. Price accepts above the zone. The breakout holds, structure begins forming above the former supply, and the range's ceiling is retired. This is the genuine break from the acceptance framework. Not a wick through and return, but a close and hold beyond the level with continuation behind it. The detection was information both times, present at the first test and absent at the second, and the close delivered the verdict. 3 things to carry from this chart. First, absorption is an event, not an outcome. The diamond fired once and was right, and its absence on the second test was equally accurate because no comparable defense was registering. Second, open interest reveals what kind of buying is hitting a zone. Both approaches arrived with heavy positive delta. Only one had open interest falling, and that one was force covering, the single most common way a well-defended supply zone gets run over. And third, a zone's second test is not its first. Defenses deplete, and the panel describes the current battle, not the previous one. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.